Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your agriculture update for December 7th, 2018. Well, what a week. You know, just a week ago they ended the G20 meeting. President Trump came back. He blasted out all these things, substantial agriculture purchases. The Chinese and the U.S. are starting to see eye to eye. Then we find out that one of the biggest companies in China, I think it's called Huawei, their CFO and the founder's daughter, both in one, the U.S. had arrested, and apparently the Chinese leader might have got word of that as they were all having dinner together. It's pretty wild what's going on. I've heard that the president said he had no idea. I don't know. But is it good for relations? Well, let's look at it in two different ways. One way it's bad, you know, that's not your best foot forward. The other way is good because you're showing you don't want to deal with us. I'm tariff man. And yeah, I know it's rough, but this is what we're doing. If you've not seen somebody like me before, I'm speaking as though I were the president, which I certainly am not, but I do understand there's two sides to this story. One is that he's got a big club and he's not backing off. The other is, how do you deal that way? I can't answer that. I do tell you that beans have come up nicely off their lows, no question. Hogs made some gains back today. Wheat really caught on fire, but this is the weekend edition of our agriculture. So what we look at first is one monthly chart, and then everything else is going to be the weekend charts. So as we come back on the monthly chart first, 947, let's call it 946 3/4, is the monthly 18-month moving average of closes. If the market goes there, I look for pretty good resistance point. Just the way you had it back here when you came from under it, I would expect the same to be developing. Last big high we had was 1045, and let's not forget we've come off 833, so we are up in this market, what, 80 some odd cents. That's pretty goddamn good. When I look at the Fibonacci numbers going from the high to the low, so we come way up here into that 1065, 70 level, down to 810 and a half, we have finally, in all this time, it's taken since July, made it back to a 38% retracement. A 50% would be at 940. In the process, the trend has turned up because we have a process now of higher lows. It's marked with the current two arrows for sure, higher highs. When I put moving averages on, to me the big average to look at is the 18-week. Markets seem to move around that and then from there decide if they're going to have an uptrend or a downtrend. You did that here, you did that here. This market's resolving to the upside. Should it continue, one possibility is the 955 and a half area, the 100-week average, but a more likely target is first the Bollinger Band. And we hit the Bollinger Band already. 916 3/4 is the close today. 911 3/4 is the Bollinger Band. You're at a resistance point. Markets don't often stay above or below Bollinger Bands. They can do it a couple of weeks in a row, but 95% of the time they'll stay within it. That other 5% is when the market decides it's going to move out into a trend. This was a downtrend. And if I take you all the way back there, which I'm sure I can do, at first you always look when you break out of that sideways type action. And this was the sideways action. Like, you're going to grab your support. It went through the 100-week and the other. You always have to understand that to break out, you continue and you catch people. And that's exactly what this market did. It rode that band. Well, we're sort of at the other side of that if you're going to try a real uptrend now at the upper side. Certainly if China came to the market and started buying big amounts of soybeans, I wouldn't imagine that's built into the market. It might be, but I wouldn't think so. So you're in an important zone. If this gives ground in the sense that it holds up and the market backs off, supports at 862, momentum is pointing up. So I have an uptrend. I have upside bias. I'm running against a resistance line out of a sideways configuration. The meal market is not as good looking a chart as beans. I think you'd agree. Sideways. The resistance, the 18-week average, not trending. You have a lower low, higher high week, momentum trying to go up here. Not a lot, but trying to move up. And the bias is up since you closed over. Actually, the bias is down. I take that back. You closed under 311.20. A confused chart. The soybean oil's fighting at this 18-week average. It did manage to close over it. It found its footing at the lower Bollinger Band, and it found its resistance at the upper one. So you've got that sideways action. Should it continue to rally? Look for 29.24 resistance. Should the market decide to consolidate? This is the logical zone, 28.19, 28.20, and you're there. You're 28.50 right now. In the corn market, we have a pattern of a higher high, lower low. More important to me is that you've come down, you tried to slice through the 18-week average and the 100-week 3 times, couldn't stay under those numbers. That's not bad action. Is the market trending? It is not. But it's also finding no, if you will, no legs to the downside. We'll see if it can get up to resistance at the 380 level. The wheat market turned bullish. Today's rally kicked up over that high. The settlement price today is over the 18-week average, and now you've got higher lows, higher highs. Momentum up, bias up, until you take out 492 on the weekly chart. This market looks higher. If it goes up, maybe it gets towards an upper Bollinger Band. The cocoa market is almost like the corn in a strange way. It keeps going to this 100-day average in 18, and it's finding its footing. It's not able to continue to the lower Bollinger Band. The pattern is one now of a higher highs and higher lows, but it needs to settle outside of that resistance to the upside. If it were to take out 2057, it puts back into play a very close lower Bollinger Band, but the market's not rewarding those selling under the 18-week average. The sugar market's trying to turn up. Higher lows, higher highs. Now, this could be a sign of a dollar that suddenly stalled out. Don't know. If you take out 1232 and closed under 1197, this chart would turn bearish. If it doesn't and the market tries to rally, we have 2 resistance points at 1400 to 1457. Momentum is not telling a story. It's just drifting sideways. The coffee is bearish. Lower highs, lower lows keep staying under the 18-week average of closes. Momentum down, bias down, resistance rather formidable back at that 18-week average at 107. The cotton market is one of these markets that if beans go up, you're looking for cotton to possibly go up. Cotton also getting a play maybe off of hope that there'll be some type of trade deal with China. This week's high was 80.93, taking out that high. So I now have a higher high, lower low. It's fought its way through the 100-week average. If you look last week, that was stopping the market. Now it's up to the, for all purposes, the 18-week. It's looking for a trend, momentum up, bias up. The resistance going to fall rather sharply. Look for this number, 84.80, to drop Sunday night when the market reopens. Cattle on the longer term chart still very favorable. Higher lows, higher highs. Market is now holding the 100-week average. That's going to be a fairly important number. You don't want to see 113.55 taken out, but as long as it's not, I look for the market to try to hold on to these gains. In the hog market, you continue with the pattern of higher lows and higher highs. You didn't break through that, but you have bias down since you're under the 18-week average and momentum down. This chart, nothing together. In other words, divergence all over the chart. So I put that all together, try to figure out what to do with it, and I can tell you already, one of the indicators I like to look at is called an Arun indicator. And this is an indicator that looks at price and time together. And it tries to verify for you, is a trend in place and holding. That's what the indicator is about. I don't believe that traders go in and use crossovers on it or the other. I've looked at them. I don't think that that's the way to use it. I think when you have a bullish trend, the green line's going to stay up and over. Keep hitting 100 on the scale. It'll back off, but stay. When you get a bearish trend, flip-flop it. The top line's going to be the red one going like that. It's easy to see, easy to work with, and the concept is simple. Let me teach it to you in my two-part video series, and it is free. Either call my staff, they can send you out the link to it, or go to our website. You'll see a carousel of free offers. Click on it, choose on the Arun indicator. If you click on this particular icon on YouTube, this will take you there as well. I'm Ira Epstein. You have a great weekend. I'll see you all Monday.